Going on, everybody? So we're coming back in with USDJPY, a little bit of how this has played out over the last few weeks. So last time we checked in, I was talking about how this wick was a seller trap. It was catching sellers thinking that this was going to be a bearish trend. So you get to this point where people have FOMO and they're wanting to jump in on the move, and that's when you have a wick like this. You have a whole lot of retail selling going on, and then you have institutions buying back price. And now the next level above that we ended up holding was here. So in this orange zone, I drew a little bit of an imbalance, which we had this level close here around 149.85 up to this level here, 149.93. Not that significant, only 8 pips. But reason being, this green zone, obviously, as I was saying, a lot of liquidity was trapped. A lot of sellers were selling and they were basically getting stopped out. If they were not getting stopped out, their stop losses are going to be above this recent high that was made. Okay? So with this imbalance, this was showing that the orders were trapped. It was showing that, in fact, the market didn't want to go back down there. And this, in fact, validated that. So we did break down into this green zone, into the liquidity zone. We did not break the low, but then we came right back up, created another small imbalance, and price ended up holding that zone, which meant it basically like dipped its toes back in the water. It wanted to get a little bit more. The market wanted more short orders before it was going to push off long. So the way that I see this right now is we've been hitting our head up against this high, right? This, what is it? 150.75, give or take. We've been hitting our head up against this. And obviously, if it doesn't break this, we're going to see lower. We're going to actually see us break this low and then come down into one of these zones. However, what I still think could happen is this pushes higher. Even if this were to go low, if this were to sell off in the long term or even in like the medium long term, there's now liquidity above this region, right? Okay, so we have the negative 0.27 fib retracement at 151.11. And that's not very far off from where we are right now. So if we see something along the lines of, like maybe we come back down here, but we close above this specifically, like, because that's what I want to see. I need to see that level be respected as it was here. See, it was very subtle, but it was a little bit of a higher low, just a little bit. If this comes back down and it respects that, we're going to pop back off and we're going to see negative 0.27. We're going to see the 151.11 being hit. And even if this continues bullish, if this is just going to be bullish from here and we're going to see like a strong bullish move, obviously we're going to go higher than that. As I've talked about, we're going to see 150, 150, and then we're going to see the next weekly level, which is 150, 192, 152 give or take. So I'm still in favor of that happening. But as I've said before, we're not in the business of predicting the price. We're just going to look for what is the most likely scenario to happen. So let me finish my little drawing here. I said if this holds out, I want to see that. Not unreasonable. Okay? And if price is actually bearish, like if there's actually some bearish intent to this, it would make sense that price bumped up here before it went down. Because if there's a lot of retail traders that are looking bullish at this, then there's going to be a lot of orders. There's going to be a lot of demand for long orders up in this area. If there's enough demand for long orders up in this area that institutions want to start taking profits from that and selling off, that would be the best way to do it. So regardless if this is going to be super bullish and we're going to bust right through this negative 0.27, or if we're going to pop up to this region and we're going to sell off from there, I do think it's more likely than not that we see this level hit before we see this level, if we see this level at all. So given that, we have been choppy for a little while. Market's been a little bit slow. Obviously, there's opportunities in here if you're if you're on it, if you're on point. But for now, I'm just going to wait and see what the rest of this week brings us. It is currently Wednesday at the end of, yeah, US session ended just a little while ago. But I am thinking, I do want to see this. And if we do see something like that and a nice closure off of it, that'd be a good entry to actually take. It's not a huge trade from here, but you know, 50 pips, give or take. Which, hey, that's a lot for some people, depending on how you trade. But nice 50 pips never hurt anybody. So with that, we're going to see what happens here. I would like to see something like that. Or, we could just hold in this zone and we could pop right off. The market's always going to do what it wants. So we're just going to try to find ways where we can create setups that give us a high probability of success and where we can manage our risk well and get a high risk to reward trade. So we wait for the market to come to us, we wait for it to present its moves. We are not the ones who chase the market as retail traders do. But the fact that we know that retail traders chase the market gives us opportunities because institutions know that retail traders chase the market. And because they know they're chasing the market, they know about where they're going to be placing their buys or their sells or their stop losses. So those are opportunities for institutions to take liquidity. So given that, let me know what you think in the comments. If this makes sense to you, if you maybe see something different happening. And as I said before, I'll say it again, this is not financial advice. Always do your own analysis. Manage your own risk and make sure the trade that you're taking makes sense to you. It's unwise to just blindly follow someone because the skill set of being able to actually read the charts in the markets can pay you for a lifetime. So you're better off learning on your own and using this content to actually figure out how you're going to trade and how it makes sense to you. So with that, I wish you happy trading. Enjoy the rest of your week, and let's see how this plays out. Peace out.